and gentlemen, good day and welcome to Q3 FY24 earnings conference call of Akzo Nobel Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon, ICICI Securities. Thank you, and over to you, sir.
Hi, everyone. It's a wonderful good morning to all of you. As always, it's our absolute pleasure at ISEC to host the conference call of Akzo Nobel India. Today, we have, as always, the senior management of the company, represented by Mr. Rajiv Rajgopal, Managing Director, Mr. Krishna R, Chief Financial Officer and Full-Time Director, Mr. Rajiv L. Jha, Company Secretary and Compliance Officer. Before I hand over the baton to the management, just wanted to highlight a couple of things about our paint sector view and how it has evolved over the last few months, few quarters, few years, and also our take on Akzo Nobel. So we had a negative stance on paints industry, for a fairly long period of time, and recently we changed that stance to recommend investors that, for the contrarian investor, time has come actually to continue to rather avoid Asian and Berger, and have a neutralish to marginal positive stance on Akzo, Indigo, and Kansai for a variety of reasons. Specifically, when it comes to Akzo's performance, it was pleasing to note in the current quarter that higher brand spends, product quality improvements, and more importantly, a lot of product upgrades, as well. So, congrats, team, for the performance, and wishing you good luck as we are entering maybe slightly choppy waters, over the next 12, 24 months, etc. And one request to Rajiv would be also to touch upon the recent organizational change. One thing observed was now India is a separate business unit which reports directly to the parent. And I would reckon as an analyst that it probably brings in a lot of focus and advantages. Request the team also to touch upon some of these qualitative aspects, including the org change as well. Thank you. And over to you, sir.
Thank you, Manoj. And thank you, to all the investors who've taken time out to join us on what I would assume is a very busy morning. So thank you. I would like to thank you for all the faith that you've sort of kept and invested in us. Let me start with what Manoj has said. Yes, there's been an organization change. Effective 1st January, India used to report into what is called Southeast South Asia, where Oscar Wissenbeek was the chairman of the Akzo Nobel India entity, as you know, and he was also the managing director, managing director, running Southeast South Asia. We've decided, I think our CEO, Greg, has decided to split it into two regions, and I fully second it and support it, because I think what happened in this was only the larger countries of India, Indonesia, and Vietnam were getting adequate focus. And I think the idea in these markets is to how do you stir growth not only in the markets but also in this smaller markets. So what we've done is we've created two BUs, ASEAN, headed by a colleague of mine called Milan. She's based in Vietnam, and South Asia headed by me. I'm based in Gurgaon, Delhi. And really, how can we bring speed to market? So really, the organization changed now. I'm going to run a BU team, which is inclusive. So we'll have obviously a few people who worked with me in the India team, but also people from some of the other countries in South Asia as a part of the team. And our agenda is very simple. How do you empower and drive growth? And the purpose of this structure is to multiply the growth over the next few years, right? I also then come to the point that Manoj made in terms of choppy waters. I think if you look at the quarter gone by, let me just quickly qualitatively run you through it. We will tell you what we've done, and I'll ask Krishna to add in terms of some of the quantitative stuff, right? So first, if you look at the last quarter, I think at a very headline level, if you were to look at growth, you would say that, look, it's not very differentiated. Everybody seems to have done well. But if you really go beneath the surface, you would see we've had a sharper performance. We've had one of the highest contribution margins in the industry. We've had very strong growth in the luxury segment in paints, continues to do well. Also, some of the adjacencies, waterproofing in particular, we continue to do very well. Our products are definitely getting rated by customers and consumers as superior. We've just had a brand study which just came in a few days ago, less than a day ago, where very clearly we've got the highest brand score that we've seen in perhaps a decade, where consumers, one of the greatest achievements really is the brand preference has dramatically shot up, and which basically means my intent to buy has strongly gone up. We've never seen this sort of a sharp rise in the last many years. So I think that's the positive. And the reason for that is very simple, that when you've got a good quality product, which is relatively well distributed and well marketed, and you run a program like Dulux Assurance, where you give consumers peace of mind because I give you a money guarantee back if there is a problem in quality, consistency, or coverage, then I think chances of you adopting it is very high. If you look at our super premium brands, Dulux Velvet Touch and Dulux Weather Shield Powerflex, these are iconic brands. Yeah, Dulux Velvet Touch advertising receives some of the highest scores, and you will see some more new work that we are working on in the next quarter when we present to you on these flagship brands as we move forward. Yeah, I think where we've had a challenge in the paints business has been in the mass and economy, where the industry has had very strong growth. It grew because of distribution growth, but at an average level, we in a what we track called the value per outlet, or same store growth, as sometimes in some of the industries you call it, right? We didn't fare that well, and there are certain reasons we've identified in a few key states where we need to sort of look at it. The competition has been fairly aggressive in terms of discounting. We are a little constrained there, not because of budgets, but because of the fact that we don't want to create practices which are not going to be sustained, right? So I believe in fact that I think distribution is a strong leverage. We've almost crossed 5,500 towns now. 5,700 is the immediate target with the teams working on. Yeah, and I believe now with the India now headed by Rohit brings in far sharper focus. With me also additionally adding weight with Krishna and team. Also not just at the operational but at a strategic level, we believe that we've got the right to win. Yeah. On the coating side, I must say again, very strong growth. We've seen very strong rebounds of our industrial coatings business with high double-digit growth. We've seen our automotive and vehicle refinish business again having strong growths, and a powder coating business. We had a one-off in our marine and protective, which was on a 9-month basis is actually growing one of the fastest, but in the quarter because of some orders which have got postponed and now very high base. Right? So that in all is what I would say. If you look at our margins, there are 2-3 reasons why we've done well. One, we obviously there's been a raw material deflation which has been seen by the industry, but we've also worked on certain programs in terms of driving cost efficiencies. Krishna leading a program in terms of water and waste, looking at certain operating leverage, and also in terms of our factories where we are looking at digitization. Not just digitization is not something that we only look at the front end, but also in terms of our the manufacturing part, how we can do it. And I think Krishna and our teams are working in terms of how we can create over the next few years, be one of the companies that brings in factories which are going to be carbon neutral, right? So really, I think we are really, I think, delighted to see that we are able to sustain the momentum. And this is despite the fact that we've had some players coming in the industry. As you know, some of the players have come and started pilots in different geographies, but we continue to sort of do well. And I think for me, I think the sustained growth is what makes the difference. So that's what I would say. Krishna, if I could just request you to add, your comments with a few numbers and.
Yeah. So if I have to sum up the quarter gone past, we have achieved the new records across all the parameters in absolute terms for both the quarter and for the 9 months period. And how we have done is that our focus on the strategic drivers, which has been alluded repeatedly with investors and the stakeholders, we remain focused on this, and which is yielding the results consistently. And top line growth of 5% and 9 months with a top line growth is in line with that. And we also improved the GM percentage by 500 basis points, while EBITDA grew by 27%. So that's a largely some of the efforts which translated into results. And back to you, Rajiv. Yeah.
So thanks, Krishna. And I again, delighted that we won an award on sustainability in the mid-size category. Recently, again, it really shows that the work that we've started putting in place on sustainability and governance is what we stand tall in order. Yeah, and just to come back on the structure, so India is now a BU. We report directly into Amsterdam. What that helps is obviously speed to market. Decision making is now pretty much in India, and so we are going to get the best of both, the global leverage and the India leverage moving forward. I think our focus is very simple. We are in an industry where we've got a highly respected leader how do we really make sure that we all continue to hold our market shares and drive growth. I think that's a very simple thing. So Manoj, with that, let me now pass it on to all the investors who may have questions to ask, and really I think this is a time for them to ask. So let me pass the baton back to all of you.
Yeah. Yeah. Moderator, could you announce the for modalities for asking a question? I know the chat part of it, but yeah, or could you please announce for the benefit of the larger audience, please?
Yes, sir. Thank you very much. We will now begin the question and answer session. To ask an interactive question, please click on the raise hand icon available on the toolbar, or you may click on Q&A icon to raise hand. The operator will announce your name when it is your turn to ask a question. To ask a text question, you may click on the text tab available on the top by clicking the Q&A tab and type your question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Arko Pratim Pal. May I request you to go ahead with your question from Sanjay Agarwal Broking Limited.
Hello.
Yes, Arko, can hear you.
Yeah, good morning, everyone. Thank you for giving me this opportunity. Based on your latest result, sales growth currently stand at approximately 5%. In this scenario, what is your corresponding volume growth rate? Additionally, how will product pricing will be adjust in influence volume growth? Could you share your expectation for volume growth within the current quarter?
Yeah, so look, I think we've had a double-digit growth, volume growth. It's
Mhm.
there in our results very clearly, and we continue to see that we'll get a double-digit volume growth. Right now, whether it's 10, 14,
Okay.
15, 18 is a matter of conjecture. I believe that we should now start getting leading growths, volume growths in terms of the industry. The price drops have been more or less equalized across all the players. So it's not a point of conjecture or debate now because it's all pretty similar, Arko. So to answer your question, we are
Okay.
looking at very solid double-digit growth, volume growth. We believe that look, this is the quarter before the elections. So we believe that whatever little investments in the country happen will happen in this quarter. We do believe that the
Okay.
months of April and May will be a bit tepid because that's what we've seen in every election year, 14, 19, right? So we believe that
Yes, yes.
April could be a second half of April, once the election dates are announced and it runs across a month across the country. It is a bit tepid in those 2 months. So we believe that look, I think these months will start. Jan was relatively not as aggressive because of various reasons. We had the carry fall of excessive rainfall in south, which was unseasonal, and a little bit of heavy winters in north, but still has been reasonable. So I do think that look, we are maintaining a volume growth stand as I mentioned. Yeah.
Yeah, yes, yes. Your operating profit margin is currently around 17%. Could you please elaborate on any potential changes in OPM that might be anticipated for this current quarter?
Krishna?
Also, normally we don't give the forward-looking guidance in terms of the financial matrices. However, as we explained, our intent is to deliver the profitable growth and enhance the shareholder value. Yeah. Thank you.
So Argo, just to
Okay.
what Krishna is saying is, look, I think
Yeah.
we're very comfortable. For us, when you look at EBIT margins, etc., we
Hmm.
know where we are as a challenger player. For us, really, it's about holding it and then saying, how can we reinvest in our brands, people, and business?
Okay, okay. I'm talking about actually while I actually your company recent PBT growth reaching approximately 15%, it's worth nothing that competitor like Asian Paints have achieved 32% growth. Similarly, sales growth sites at around 5% compared to JSW Paints' ambitious goals of 2,000 crore in just 3 years. In light of this comparison, could you elaborate on the factor contributing on to your company's current growth trajectory? Additionally, what are your expectations of the current demand scenario and your roadmap for
So
achieving more
Arko, look, I
competitive
cannot.
growth? Sorry.
Okay, so Arko,
Hello.
look, I cannot.
Hmm.
So I said thank you. Can you hear me?
Mm.
Yeah.
Yeah,
So,
I hear
although I
you.
said thank you,
Mm.
we cannot comment on others, expectations or illusions of what they will do, right?
No, no, no,
The
no.
fact is, the
I'm.
players.
Mm.
Please allow me to answer. Please allow me to answer. I'm saying
Okay, okay.
players have come in the
Tell.
last 4 years, made statements that they will do certain turnover in 2 3 years. We've seen 3 years have gone by. We've seen where we are. So, I'll please allow. I think, look, we are living in a market which has everyday challenges. Our job
Mm.
is to make sure that we fight and continue to grow. What you've seen in Akzo Nobel India is what I can talk to you about. If you look at the last
Mm.
2 years, we moved into the top two in terms of growth, something that I promised the investors 5 years ago, right? That it'll take me two,
Okay.
3 years. But if you speak to all the investors, and if you would have attended my road shows, you would have seen very clearly I've said it. And that's where we've achieved. And we will continue to make sure that we earn the right to win in our paints and coatings business. So I think that's not a concern. Look, I think you've got to understand when you talk about Akzo Nobel and brand Dulux, you're talking of a
Yeah.
brand which is the best in class quality, brings in best in class international leverage through R&D, etc. Right? So, and you're talking about a
Okay.
company with one of the highest levels of governance in the country, right? So, I also feel very proud of being a part of this organization also, and I can say that from a growth perspective, we've put a strong map. Unfortunately, we cannot share specifics now, but yeah, we are fairly confident that we put a roadmap to address some of the challenges that the market will see in the coming times. Hopefully, that addresses your
Okay.
question.
Okay. Okay. I understand. Thank you, sir. Thank you for your answer.
Thank you. Ladies and gentlemen, a reminder to all participants to ask an interactive question. Please click on the raise hand icon available on the toolbar, or you may click on the Q&A tab to raise hand. To ask a text question, you may click on the text tab available on the top by clicking on the Q&A tab and type your question. Our next question is from the line of Nilesh Patil from ICICI Securities. Please go ahead. Nilesh, may I request you to unmute your line from your side, please?
Nilesh, are you there?
Mr. Nilesh, may we request you to unmute your line from your side, please?
Operator, I can take Manoj here. Can I take a couple of questions in the chat window, please?
Yes, sir.
Yeah. Um, Rajiv, just allow me to read out. I think this question the previous participant did ask. Not sure it's appropriate, but let me read out because it's something which is there in the public domain. It's so Mayank Todi from BMC is writing in that look, despite being an aggressive and old player and having many technology and innovative products and increasing coverage too, new companies like General Paints has already reached 2,000 crore in a span of 4 years. Why are we having a sluggish growth, and what can we do to achieve?
So I think Manoj, I think first the question to that is let's understand, and we have to break the two parts. I think our coatings business, our growths have been very fairly robust, in line
Yeah,
and
yeah,
ahead of the
yeah,
industry. Right? So let's come to
yeah,
the paints part, which is where I think the question then sort of is. If you look at bulk of the growth has been coming in terms of economy. What people say value segment is a new English term that I picked up, but basically it's mass economy and property. Okay, so
right, right.
look, we participate in these segments. Our strategy is very clear. We participate in the segments so that we keep growing our core business, which is our premium
Yeah,
segment, which is what we are known for, right? So to my mind, that's been the strategy. I would beg to argue that if you look at the 9 months results, right? If I look at our results, we've had a growth which is, and again, take a 2 year CAGR, okay, or 3 year CAGR. Yeah, we are in the top two in the industry. So yes, if you compare it to a 15, 10-year period, you may call it sluggish. I take that point, right? But I do think that what you're seeing is a renewed Akzo Nobel India, yeah, and not just 2.0, but maybe 5.0, because I think here we are here to make a difference. And I think what we are trying to do is to bring a lot more granularity in the way we run our business, look at our premium portfolio, look at our propositions, look at our the adjacencies that we've launched, right, and reinforce that we are a solid company that offers great value in terms of best-in-class quality and international to our consumers. So that's
Yeah,
the answer.
yeah. Thank you, Rajiv. There is a bunch of questions from Lakshmi Narayan and KG from Tunga Investments. Can I take one by one?
Yeah, sure.
Yeah. I think you addressed some of it, but still, let me just read it out. So, how many tinting machines you have now? If I heard you correctly, you said 5,700, right?
Tinting machines, no. We have got much more
Oh, no.
than
Sorry.
we've
Stands
almost
corrected.
got
Oh, sorry.
close
That's the
to
number of towns. Yeah, sorry. Yeah, sorry.
yeah. So
So,
we've
anyway, let me read
almost
out the questions. Sorry,
yeah.
sir. How many tinting machines you have now? And second is, what is your dealer count? Point number three, you were available in 4,700 towns in FY22. On a previous call, you mentioned you will scale to 7,500 to 8,000 soon. Where are you in the journey? And what is the dealer margins you give now? The range.
Yeah. So let me go one by one. Our total outlet coverage, we are crossing almost, about 23,000 to
Yeah,
25,000 is a
yeah.
range that we should be in a year's time. Tinting machine, hence, is almost about 18 to 20,000 because you see our capture of tinting machines, Axo's got very strict captures. We look at a revenue, a threshold revenue, which is not the way all players do. So it's not a like-to-like definition for players, right? I'm giving you our definition, which is a global definition, which is very stringent that machine has to give a certain throughput to be called active machine. Okay, so
Yeah,
in that
yeah.
we out of that, if you now come down, comes to about 18 to 19K. That's the sort of efficiency. And yeah, we have crossed 5,000 odd towns. What I said is 8,000 towns in 2 years' time. We are on that journey. Our endeavor is through using our micro distributors, what I used to call hub and spoke. We are on that journey, and we will continue to sort of invest in our distribution to reach there. Yeah, so I think these are the three questions you asked. In terms of dealer margins, look, dealer margins is a very difficult question to answer because it's a competitive play, right? The margins keep, the dealer margins are, for us, are in pretty much in line with the industry, I would say, right? In the sense that, if you look at our competitive rates, yeah, I think the market leader and us may be a little more conservative compared to some of the other players in the industry, if I've answered the question.
But is there a range, Raj, you would be able to mention about the industry practice?
It's a very wide range, Manoj. It depends on the category in
Yeah,
which you sell, right? It could start from 9-10% and go all the way up to 16-17%. So it's a very wide range. Depends on the specific product, market.
next. Yeah,
Those
yeah.
customers. Yeah. So that's a very wide
Fair
range.
enough.
So
So, understood. Secondly, okay, I'll take one at a time now. The sales mix on industrial and home. I believe he's meaning decoratives there. Sales mix on industrial and decorative, and how it has changed 9 months fiscal 24 to 9 months fiscal 23.
Krishna, would you throw some light?
It's largely in line as we disclosed previously. It's around 65% is decorative, and then the industrial is somewhere around 35%, and which is largely in line as it stands today. Yeah.
Okay. But I would assume that, sir, it would have the industrial, the non-deco piece would have increased in salience, right? Given that it has been growing faster.
So very marginally, Manoj.
Yeah.
You're right. So when you say 65-35, it's over a longer time frame. When you take, that's why when you look at a specific quarter, right? If you look at not the quarter for which the results are announced, but the prior quarter, yes, one quarter it was even 60-40, but on an aggregate, it's between 65 and 63 and 35 and 37. Yeah, that's the range in which it is. It's not dramatically different. But paints is also doing well. It's not that paints is not doing well, right? That's what I've been going on saying. Yeah. Particularly the B2B business and for us in the decorative side has done very well.
Very clear. Understood. Second, again, sales mix in decorative by premium, standard, and economy. 9 months this fiscal versus 9 months last year.
We don't do that. Give that, Manoj. But suffice to
I know.
say that for us, what I can share is that our premium, super premium, what we call the market now calls luxury, has been one of the drivers of growth. So that's been the driver of growth. I think we were growing in the last few years in terms of the value segment, mass and economy, led by distribution initiatives. We're doing some more work there to try and get that back, where the industry has seen a better sort of growth, primarily because of the historic, market shares and obviously the consumer reach, right, customer reach, right. So that's something that we are still working on, and we will have some sort of ways to address that too.
Understood. And then project business versus non-project business mix.
So the projects business, it now constitutes to about 20-23% of the overall salience of the decorative paints, has been doing very well. Again, the reason is because that's where we sell all our premium propositions, and it's primarily because of the quality. Today, a lot of the people who come to us, if you look at all the iconic buildings that we are coding, it's largely because of the quality of the product that we offer. So we don't need any brand and advertising there. It's basically quality that gives us the volumes.
Very clear. Very clear. And metro top 6 cities salience versus non-metro revenue mix.
So there, the metro salience is slowly coming down, relatively because for us, the metro performance has been a slightly weaker over the last, 2 quarters, and also because of our distribution initiatives, etc. The non-metro growths have been faster, but that's expected, right? I mean, that's expected when you drive distribution that the non-metro contribution will start increasing over a period of time, Manoj. So that's built into our plans. There's nothing which is a bit of a surprise or a concern at this point of time. The concern is the fact that a couple of states, and I think some of the other players have also mentioned, whether it's some of the eastern states and Kerala were a bit of a challenge. Kerala, we've started slowly getting back. We still have a few challenges in some of the eastern states. I think that's the only concern for us, and we put our action in place there. Both in terms of structure, organically we are going to do some work, and also in terms of investments. So that'll address it.
Very clear. And lastly, in this segment, where have you gained market share?
So we believe, look, we've continued to gain heavily in the premium segment, but at an overall level, we also believe because of adjacencies, etc., we continue to gain share. Primarily, that's what our internal numbers estimates that we pull, and that's fairly accurate because it also shows us when we were dropping a few years ago, right? So we believe that's a time and tested study for us now, and we believe that we are gaining shares now in a little higher than about 9 to 10 states now, which is a good relief compared to the fact that many years ago Krishna used to come from 3-4 states, right? Yeah, so that's where we believe. Yeah, we are really doing well in geographies now. So I think that's the thing that we are pretty pleased with. But we've yet to move forward, Manoj, to really getting it across the country. I think that's the execution excellence part that we still need to, as a team, get the teams to completely align to.
Understood. Operator, I found Mr. Mayank Todi there in the voice queue. Is he still there? Otherwise, I can continue with the chat questions.
No, sir, he's not in the voice queue anymore, sir. Do you want me to
Okay.
announce?
No, which is okay. So you can announce actually. So then I can get back to the chat after that.
Okay, sir, one moment. Ladies and gentlemen, to ask an interactive question, please click on the raise hand icon available on the toolbar, or you may click on the Q&A icon to raise a hand. Thank you. So you can go ahead.
Okay. In fact, this question is from Mayank Todi of BMC Advisors. Will this 5-6% growth rate continue, or we are aiming to achieve higher growth rate, and how can we achieve?
So look, I think the answer is a bit mixed, and Krishna, feel free to answer the question. Look, there'll be a gap between value and volume, primarily because you've just seen the sort of price drops that have got announced. So that's obviously now going to apply for the full year, Manoj. Okay, so whatever price drops have happened in December, Jan, now.
Hello?
Sir, we are unable to hear you.
Manoj, can you hear us?
Yes, sir, we can hear you now.
No.
Okay, there was some. Okay, so all I was saying is, look, there will be a bit of a gap between value and volume. Our challenge is how are we bridging it, largely through better mix realizations and driving some actions in some of our key categories, making sure that we are able to partake some of our new product innovations that we'll bring during the later part of the year. Those are ways that we are looking at addressing it. Manoj. Krishna, you want to add something? Yeah. So that's, Manoj, to my view, the way we are going to sort of look at it. We believe that we should continue to sustain good double-digit volume growth as we move forward too.
Sure. So, sir, thank you. Very clear. Next one is from Rohan Kale of Incred Capital. How much does project business and premium range contribute to decorative sales currently versus 2 years back?
No, I did answer that question. I think projects, I
Yeah,
just mentioned, Manoj, to
yeah,
you
yeah,
that
yeah,
we moved from 20 to 23, right?
yeah,
So that's the answer. And premium, we
yeah,
don't
yeah,
answer because, that's not, we don't give segment-wise results
yeah,
for obvious reasons.
absolutely. Absolutely. No, in fact, your disclosure standards are one of the best in the industry. Okay. The next one is from Alisha Mahavla. She's asking from Envision Capital. She's asking, have we taken any price cut during the quarter or in 9 months fiscal 24?
Yeah, so we took the two price drops that we've taken recently, in December, and we've just taken one in January, which works out to approximately 3%, right?
Both price cuts
Put together,
put
yeah,
together is around
3%. Yeah, both price drops. That's broadly in the paint side. Coating side, there's been very little price drops. That based on
It's a contract specific.
it's a contract specific pricing, Manoj.
Yeah, fair enough. Raju, one question from my side on this pricing bit. Given that you're over-indexed on, premium and luxury, is it fair to assume that, the price actions requirement for you as an organization decorative would be far lower versus the peers?
Look, we are very clear here. We will sort of match pricing. We are not going to give any operating leverage to any player in the market, right? And we will continue to build and grow the brand, right? And that's the way we're going to drive the business. We are not going to give anybody any unfair advantage in terms of room to play.
Very clear.
Manoj?
Understood, sir. Understood. Thank you. And getting back to the questions from Lakshmi Narayan and KG, he's got a couple of questions on strategy. One, what are your strategic priorities for fiscal 25?
So, look, I think in terms of strategies, I would only call the same things that I've been saying over many years, which is, build the brand, make the brand a little more iconic. Really, how do you get a strong distribution network because the business is there? How do you accelerate growth in the categories which drive the growth? So for us, still work to do in the mass and economy segments, particularly which the market now calls value segments, right? Those are the three key priorities, really. And more importantly, how do you make sure that your people agenda you're doing well? In fact, Manoj, what I failed to answer because the question didn't get asked is that we've had one of the highest scores. We've done a internal people study called Voices globally, and India got a score of 4.2, which is one of the highest scores. So, I think also tells you in terms of the mood of the people, right? So we are here. We realize that, look, the market is going to get a little volatile in the months ahead. We as a team are, I think we believe that we really want to thrive during such an opportunity. It gives us an opportunity to bring to the market the best of what we have, and again showcase how each of us can add value to the company and to the industry.
Thank you. And lastly, from Lakshmi, is when compared to the industry leader in decorative, where are the portfolio gaps for you, and when will you address this?
Look, when you compare to some company which is fairly big, look, I always believe in life when you fight a battle, don't look at the size of the company, right? You focus on terms of your strengths and your. So we will continue to build on our strengths. Obviously, when you look at to answer the question, there's a huge gap in terms of the mass and economy segments, right? And we are building a portfolio, but we've crafted a differentiated path for ourselves, Manoj, right? In fact, in the brand research, one of the things that we're the only brand which is now seeming differentiated. And I would be delighted if you guys also do a survey and tell me what your findings are in the industry. Right? Very clearly, the consumers are telling us that yours is the brand which is differentiated in the industry. So very clearly, that's what we wanted to do. That's what we are seeming. Consumers seem to tell us that we are doing, and that's what we'll continue to do. Our job is to bring the best of some of the global brands and some of the best-in-class quality, international, right? And the fact that Dulux is also about Let's Color. How do we bring color to people's lives?
Understood, sir. Next one is from Dipen Sanghvi from Inam Asset Management. Two questions there. One, considering the raw material cost deflation, product mix change, and recent price cuts in industry, do you believe that gross margins has peaked out at 44%? Where do you see it trending in the near term?
Look, it's a very difficult question to answer because what the unknowns are far higher. As we speak, the impact of what's happened on the Red Sea is still unknown for me. We live in a very fragile world today, Manoj. Every day the new headlines keeps changing. So if I assume everything is going to be as is and there is no further disruptions, then I would agree. But I don't think that's the way it's going to happen. I believe that look, there would be certain drivers because you're seeing certain global large economies also having challenges in terms of growth. Yeah, so those will add pressures to it. So which way the crude oil is going to go, which way the forex, the currencies is going to go, is a $1 million question. I think even some of the best brains in the country are going on trying to figure it out. So I would leave Manoj, myself and my team to what we are good at, which is to say that look, we can't predict the external world, but let's do what best we can within what we can control, right? And that, to me, I believe that look, the current margins are the sort of right to win margins, and we should try and sustain it.
Understood. But is it fair to say that the risk is actually on the downside and not really margins expansion looks a
Absolutely.
very low
Yes.
probability one? Yeah.
Yes.
Okay. Fair
Yes.
enough. Fair enough.
Primarily because of the portfolio.
Yeah. Yeah. Yeah.
Because the
Fair enough.
contribution of premium is very high
Yeah.
compared to the industry in the paints business, right?
Understood.
So as you start going to the question that earlier got asked by the other colleague, right? That if you start playing more in the mass and economy, obviously, the margins will sort of obviously come down. So you're right.
Secondly, Akzo had taken this again from Dipen from Inam. Akzo had taken some price cuts in the mass market. It's a question mark. What is the progress on regaining the market share?
Yeah, so absolutely fair question. I think the reason we took the price cuts was because we had at one point started touching 5% premium versus even the market leader, which was not sustainable, right? And we had to do that because of the sheer commodity cost inflationary pressure that hit us. And as a challenger brand, it's very important to be very profitable when you grow, because otherwise your ability to reinvest in people and business starts diluting, right? So that's something that we wanted to do. And as we started reading the tea leaves and started seeing the deflationary pressures, we wanted to correct it. How we done? We in a quarter we did. If I take 9 months, we are doing okayish. Last quarter we didn't do well, so there are certain challenges we need to fix there, and we hope to address that soon in the coming couple of months. Yeah, it's not something that I'll be able to immediately address in 1 month, but it'll take a couple of months because there are certain geographic challenges, pricing challenges in a few markets, right? We also don't want to unnecessarily aggressively do a trade spend, which is not a sustainable solution in my view. So we are looking at it a little more holistically and working on the right way to address it.
Okay. Next question is from Mayank today. He is asking, what was the volume growth of this quarter, for this quarter rather, and how much volume growth we are expecting in the upcoming year?
So Manoj, I said double digit. I think
Yeah.
in the number in the overall commentary and even in the results, we've been very upfront on it.
Yep.
We expect it
Yep.
to continue to be in the same region, if not higher, in the coming quarter.
So, and in the next 3 to 4 years, where can we ourselves, given that we are achieving 5-6% growth? Honestly, I don't understand the question, so I'm just reading it again. In the next
No,
3
I
to
think
4 years, where can we see ourselves, given that we are achieving 5 to 6% growth?
Look, I think 5 to 6 is a this year phenomenon, and that's happening because your volume growth is leading the value growth primarily because of the price gap, right? See, ultimately, what is value? Value is volume, price, mix, right? These are the three variables, Manoj, right? So the volume is going up, but your problem is your price has come down compared to the last year. That'll end by December this year. So if you look at a 2-3 year phenomenon, we should be back. I think look, pricing will come back here, right? Because the company has to also have bear inflationary costs, the people's salary costs, and other inflationary costs, that we need to bear. So pricing will come back. I believe that both in this and industry, right? It'll be bearish for a year because of new players, everybody wanting to keep their positions tight. But over a period of time, I think we will get back to the scenario that we've seen in 15-16, Manoj, when some of the world's largest companies tried to come into the market and were not able to craft any roadmap and left.
Yeah. The next question is from my colleague Nilesh Patil. The investments towards premiumization of product portfolio has been stepped up with multiple new products. You have upgraded multiple products and decoratives. What are the further opportunities for premiumization within decorative segment?
So maybe I should answer this question, in the next investor call, because otherwise I'll be. But suffice to say that look, it's right on top of our agenda, right? We believe that that's an end where consumers really have money to spend. See, ultimately, whatever you do in terms of premiumization has to add value to consumer and must have relevance to consumer. If only consumers, you and me will only buy things if it's the propositions are relevant to us and we find it appealing. So the challenge for us is really to find those insights because in this industry, differentiation is not something which is very huge, right? In any industry, differentiation also can be matched over a period of time. So we are working on it. We are working very strongly with our global teams. What I'm also pleased, Manoj, as a part of this, and I forgot to mention earlier when you asked me about the structure, is our R&D center in Thane is now going to be a global sort of feed, right? And so we are putting some of the best tools, analytics, etc., there, so that we are able to also work on propositions which are going to be in periods of time really differentiating. So that's what we are working on. Let's see, keeping fingers crossed, right? Some of these things are very difficult because some of the tests sometimes you do in the lab, how it really responds in the market, sometimes is very difficult to predict.
Understood. Two more questions in the question chat. Nirav Savai of Abacus is asking, what are the levers on the cost side which can ensure that current margins are sustainable? What has been the volume growth in premium, luxury, and value segment?
Okay. Thanks, Manoj. I will take this question. And what is our strategic intent is to deliver the cost line, which is to support the growth. Okay. And we have a continuous improvement program which is running in the multiple formats in terms of different within the different functions. And whatever is the cost which is there, we are only spending where it is needed, be it on people front or on the media and the brand spends. Apart from that, all other costs are largely stable, and we are trying to bring the efficiencies in optimizing the cost structures. Yeah.
Yeah. The second one, I'm not sure if we want to take it, but let me just read out still. What has been the volume growth in premium, luxury, and value segment?
I think Rajiv has explained it.
We don't
we
don't give it.
Yeah.
But Manoj, if you look at double-digit growth and the fact that we have not done well in one couple of segments, I think you can put two and two together and arrive at it.
Yeah. No, fair enough. Fair enough. This is also partially addressed, but still, let me read it out. Dheeraj Dave from Samvad Financials asking you, any research activities carried out in India? What are expected new products applications which shall be expected? Any idea about share of product launched in the last 5 years?
What do you mean by share of product last in the last? So, our
I think
contribution.
the NPD contribution is what I think he's asking. Let's say the products done, the new product. Yeah. So.
See, for us, the way again, it's a definition of NPI. So I just want to define it that, what we launched this year, we look at because once you complete 1 year, it's no longer an NPD. Typically, these contribute to about 8 to 10% of our revenue. And how have they done in the last 5 months? I would say about 65, 70% of our growths have come from products which have really, been launched because we launched the economy segment in 2021, that which is a driver, waterproofing many of the categories in the last 5 years, right? And also revitalize some of our premium brands. So obviously, hence the large percent of our growth came from these part, and they continue to do well. Manoj.
Understood, sir. That brings me to the end of the chat question queue. Elko, can you please announce once again for the voice part of it? Else we can close the call.
Yes, sir. Ladies and gentlemen, a reminder to all participants to ask an interactive question. Please click on the raise hand icon available on the toolbar, or you may click on the Q&A tab and raise your hand on the icon. Thank you.
Rajiv, Krishna, and Rajiv, over to you for any closing remarks, and we can close the call, please. Thank you so much, sir.
Thank you. Really look forward to listening to more questions from the investors. I think, some of the regular people who ask questions seem fairly either have understood or maybe and we look forward. We do plan an investor meeting sometime, and we will get in touch with all of you and let you know. But still, then stay strong. And if you have any further questions or any other thing to ask, please do reach out to Rajiv Jha, our company secretary, and we would be delighted to sort of answer you. Thank you, Manoj and team, for hosting us, and wish all of you a wonderful day ahead. Thank you. Good day. Bye bye.
Yeah. Thank you.
Thank you. Thank you.
Thank
Thank
you.
you, everyone.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.